Hello, ladies and gentlemen. Welcome to this week's sentiment analysis. It hasn't changed much from last week, to be honest, except the war industry is very profitable. Realistically, I think the best approach is just going to be maintaining a safe, steady, risk-aware strategy. That's not much of a sentiment analysis, but it does lead into what I started last week, which was finding a way to get information to help us make the best decisions. If you've been following the Discord server for the last couple of days, then you know I have been working on a technique with simulated candles with over 100 different runs on a single asset, being able to simulate quite aggressively exactly what a market might look like. And here we have ADA, its entire history. One of the downsides of this is being able to really present this information in a way that doesn't overload just about every computer there is. The analysis part is really easy. However, actually putting a chart together with 3 million candles is quite challenging. So I had to do a little bit of extrapolation just to get the 50,000 I have here. But that's what we have to work with, and it still demonstrates everything we need regarding the history of ADA and how that history actually shows up in the real market. Now, as I said, I have made 100 sample runs or simulations. I think technically about 106 or 108. And this actually has some very interesting results. So we're going to talk about those results today, where I'm going to show you why this technique is so powerful in being able to actually determine whether or not your strategy is going to be successful. From the standpoint of where this chart started, Kraken only allows a maximum of 721 candles to be downloaded historically. That's it. So, if you download from the 1 minute time frame, you're only going to get the last 721 minutes. You're not even going to get a full day. When you're backtesting a strategy or researching the viability of a technique, that's just not enough data. So the synthetic candle generator that I posted in a Discord server will take the highest time frame, in this case 2 weeks, and actually build a synthetic history of the entire asset. In this case, I built literally 7 years of data. That lets me get a reasonably accurate representation of how my strategy does. Now, as I demonstrated in last week's video with the numerical tables, the consistency is quite phenomenal because you're able to really produce a large array, and that will be demonstrated later. For now, let's just take a look at this particular chart. There's a lot of things here, including all of the various sample runs. Now, these are closing prices only from each sample run. So let's actually start looking at this chart and go through the process of demonstrating exactly how I created this effect. Because 721 candles on a 2-week time frame are real, actual live real-time data pulled right off the market. The data between those candles is generated statistically but accurate to the market so that I can actually see the market that we see here in a real form, in a legitimate, testable form. So let's start zooming in and seeing how this looks. Let's take back here and actually let it zoom in. I've just zoomed in a little bit, and we can see there's not much difference. We see a little more peaks here and there from the random permutations. So let's try to zoom in a little bit more. Okay, now let's zoom in a little more. And we're going to keep zooming in until we actually see the individual closing prices. Getting closer and closer, and we're starting to see prices fan out. And that's the point. These are individual closing prices in the simulation that follow the direct, literal market pattern of the 2-week price action. So what we have here is a very specific type of market that we can see and test thousands upon thousands of times. And that really is the entire point of the simulation, to be able to actually test and model a strategy. Because one of the biggest failures of backtesting is curve fitting, or overfitting an algorithm to a specific market. The synthetic candle representation actually stops that, because you can't overfit what you can't predict. And that's the whole point of this technique. By having 100 different simulations with 100 different candle structures, you can't predict how your algorithm is going to work. So by implementing this in such a way, in essence, you gain the ability to see the future, because you can actually build a model that follows real market data without curve fitting or forward-looking bias. You could actually see how your model is going to do on a wide range of market data sets. This is how you survive any market. Not by luck, not by chance, not by over-leveraging your money, but by statistically trying every possible combination you can. Now in this case, I have gone through and actually ran 100 plus tests. That's really a minimum for this kind of a data set. But ideally, you could run 1,000 and have literally a complete blueprint of the market that you can actually be able to permeate with machine learning or other statistical models that can calculate deviations and build that into your algorithm. That's what the Jackrabbit Technical Analysis Library really brings to life. The real world things that you can't do with most software. To be able to build a modeled system that actually gives you meaningful information. Let's zoom in a little bit more and see if we can get to actual separation of prices here. Now, of course, the Technical Analysis Library is part of Jackrabbit Relay, and that is open source. So if you want to support it, to support this continuing development, the links will be in the description. It does cost quite a bit for this in terms of what time is needed for research and development, but the results give you real answers. Real, meaningful answers based upon a system that gives you the ultimate control over your trading. Share your thoughts below and let me know what you think. Please visit the links in the description. Thank you for watching.